Not even just on the year. I mean, on the week, the S&P closed up 1%. The XLF, the ETF that tracks most of the major banks and investment banks, was down 1% in the week. And there was a newsy week in the banks. I mean, there was some decent news out of Goldman. There was some decent news out of JP Morgan. There was some decent news out of Citi. This is on the fundamental front. The stocks couldn't rally. Wells Fargo, I don't know if you guys have checked this thing out. It just broke the downtrend, or excuse me, the uptrend that it's been in from the April lows. The regulators are still all over that. Jamie Dimon, the CEO of JP Morgan, gets in a pissing match with the president.
Goldman was down for like 10 straight days.
Yeah, it was I look at it and I say to myself, I'm not certain what they're going to be able to say on Q3 earnings when we get into mid-October that's going to take this sector up. It's had massive underperformance. I think you just define your risk with put spreads in October, or excuse me, out to November, which will really catch the bulk of the components of the XLF. And I'll just get to the trade. I mean, it's pretty simple here. Option prices are relatively cheap in the XLF. Today, when it was trading at 28.20, you could look at November expiration. You could buy the 28.26 put spread, paying 40 cents for that, buying one of the November 28 puts for 58 cents, selling one of the November 26s at 18 cents. It costs you 40 cents. It breaks even at 27.60. You make up to 160 between 27.60 and 26 bucks. That's a 4-to-1 payout. I like the risk reward there. It doesn't really, I'll let you speak to the charts. It doesn't have a whole heck of a lot of oomph to the upside here. And if the fundamental news gets worse, these stocks are going down.
I mean, look, what we know is that financials are such an important part of the market. And it's not so much a rate thing now. Whether it's 3.15 or 2.85, basically the cost of 10-year money is stuck at 3%. And financials, big ones, Morgan Stanley down 10, Goldman Sachs down 10. You're talking about BlackRock down almost 20, Ben Franklin, Invesco down 35.
Yeah.
Asset managers not working.
Are they that important to the market? I can almost take issue with that at this point.
Sure. They're the sort of second or third biggest by weight in the S&P. But in terms of the lifeblood of the system, the most important sector by far. And they're not acting well. I mean, as a plain, simple sort of...
It's really incredible that the market's been able to do what it's been able to do without virtually any participation from the financials.
There are two components to the success for financials. One, which we commonly talk about, which is their interest margins, which you would expect with rising rates would improve. But the other, of course, is the fundamentals of their business, which includes, among other things, commercial loan growth, the housing market, those types of things. The luxury housing market, at the very least, seems in many markets to have peaked a little bit. Those types of weaknesses. Have we reached peak auto? That's another area of heavy finance, so that would obviously be an issue. And just speaking specifically to Dan's trade here, looking out to November, right now the implied volatility in XLF is less than 15%. That's versus probably about a 17% average. Because it is essentially an index of financial institutions, implied volatility, it's kind of an index, is typically going to be low. This is much lower than normal. It makes it a very good value if you're thinking either about hedging exposure to the space or if you're thinking about just a general hedge to the market. And if you're looking, obviously, at making a bearish bet in XLF specifically, it makes a lot of sense.
Give you the last word on that.
Yeah, so when you look at the components and you look at, JP Morgan and Bank of America are the only two in the group, in the top 10 groups that they're actually up on the year. So you look at the investment banks, like you mentioned, Goldman had that horrible streak, Morgan Stanley. If there is bad news out of these, you could get a flush out of those, and then you could kind of get a move back to 105 in JP Morgan. You're going to have the XLF back at 26 if that's the case the next 2 months.